Hey everyone, and welcome back to The Explainer. I am absolutely thrilled you're tuning in today because we're taking a really fascinating journey into the actual practical mechanics of how huge ideas, big dreams, and massive projects become reality. I've always wondered how someone takes a multi-million-dollar concept and just builds it, or even how everyday families manage to make their biggest life purchases. Well, it all happens through a concept I like to call the bridge of capital. Understanding the underlying systems of our world is absolutely crucial. And today, we're going to unpack the specific businesses that make all this economic progress possible.
Okay, let's dive into this. Here is our roadmap for today. First, we'll look at the fundamental problem with great ideas. Second, building that capital bridge. Third, we'll walk through the step-by-step mechanics of how financing actually works. Fourth, we'll cover 5 distinct types of financing. And finally, we'll zoom out to see how all of this fuels the global economy.
All right, let's kick things off with Section 1, the problem with great ideas, or what I call the chasm between a dream and reality.
Let's start by painting a picture here. Say you've drawn up the perfect plan, you've got the talent, and you clearly see the opportunity. But almost immediately, you hit a massive hurdle. Got a brilliant business idea, but zero cash to actually make it happen? It's a super frustrating scenario, right? You literally have customers waiting, opportunities knocking on your door, and a crystal clear plan for growth. But you're short on the actual physical cash required to execute it. Think about a small startup that desperately needs specialized equipment just to launch. Or on a bigger scale, a massive shipping company wanting to buy a new vessel to expand its global route. Or even on a personal level, a family that just needs a reliable car to get to work. The need is definitely there, the plan is there, but the funds? They're missing. And this creates what we call the chasm. Ideas and customers are waiting, but a lack of upfront capital just totally halts progress. It really doesn't matter how good your blueprint is. Without funds exactly when you need them most, even the very best plans are completely stuck on the drawing board. It's really a timing issue. You know you'll have the money eventually, once the business is running or your wages come in, but you need that upfront capital right now. So how do we get across? That brings us to Section 2. Building the capital bridge, which is the ultimate solution. Here is where we introduce the hero of our story to span that gap. A financing business is essentially an organization providing funds to individuals or companies in exchange for repayment over time. The basic concept is actually quite elegant in its simplicity. Instead of you, the customer, having to cough up the entire massive cost of something up front, which we just established is the main roadblock, you receive the necessary funds from a financing company. You then agree to repay that total amount in smaller, manageable, scheduled installments. And this brilliantly illustrates their core function. They are the bridge. They're literally connecting people who need money with the capital required to achieve their goals. By offering these funds, these businesses step in and actively support entrepreneurship. They support massive corporate expansion, they drive innovation forward, and they give everyday consumers real purchasing power. Without this bridge, you'd basically be forced to wait years just to save up, and by then, you've probably missed the opportunity entirely. All right, moving on to Section 3, how financing actually works, the mechanics. We are going to walk step by step across this bridge right now. To do that, let's anchor ourselves with a concrete example. Imagine $100,000. Suppose a manufacturing company desperately needs a brand new machine to double its production speed. The machine costs exactly $100,000. Now, it's a fantastic investment, but the company simply doesn't have $100K in cash just sitting in a bank account ready to go. They are facing the chasm. So, here is how they cross it. Step 1, evaluation. The financing company steps in and evaluates the manufacturing business. They carefully review their financials to make sure they're a safe bet. Step 2, approval and funding. If the lender decides the business is healthy, boom, they approve the request and provide the exact funds needed to buy that machine. The business gets its equipment today. Step 3, repayment. In return, the manufacturing company agrees to repay that amount over a specified period. In this scenario, maybe they set up a 3 to 5 year installment plan. So the crucial point here is the financing company isn't just doing this out of the goodness of their hearts, right? There's a mutually beneficial toll for crossing this bridge. Your repayments include the principal, which is the original $100,000 borrowed. Then there's the interest, which is basically the fee they charge for providing the funds in the first place. And finally, there might be additional fees, depending on your specific agreement. This whole structure generates vital revenue for the lender while simultaneously giving the manufacturing business the equipment it needs right now to grow its own revenue. It is quite literally a perfect win-win ecosystem. Let's shift gears a bit. Section 4, 5 types of financing. Because just like in real life, we need different bridges for different journeys. Think about it. A footbridge is very different from a massive suspension bridge, right? Not every financial need is met by the same lender. Let's compare traditional banks versus fintech lenders. Banks are the ones we all know. They offer personal loans, mortgages, business lines of credit. They usually offer highly competitive interest rates, but the trade-off, they have very strict approval requirements. On the flip side, we have fintech, or financial technology lenders. These guys use purely digital platforms. They provide much faster, incredibly convenient financing solutions, where you can apply online and approvals happen way quicker than the legacy processes at a traditional bank. But the landscape is even richer than that. We also have these intensely specialized bridges. Finance companies, for instance, focus entirely on specific markets, like equipment financing, vehicle loans, or targeted small business lending. Then you have leasing companies, which are super interesting. Instead of lending money directly, they actually buy the asset, like a fleet of trucks or heavy machinery, and let customers use them for regular payments. When the lease is up, you can return it, renew it, or just buy it outright. And finally, microfinance institutions. These are incredibly important. They provide very small loans to entrepreneurs and individuals who simply don't qualify for traditional bank financing. It's an absolute game changer, driving economic development for underserved populations worldwide. Okay, zooming out now to the macro level. Section 5, fueling the global economy. Where do all these bridges actually lead? Now, what's really interesting about this breakdown is how financing touches literally every aspect of our society. For consumers, this capital bridge makes major life milestones actually possible. Things like buying homes and vehicles, funding higher education, or affording critical healthcare services. On the business side, it's all about investing in cutting-edge tech, getting the payroll capacity to hire new employees and expand operations, or having the financial runway to enter completely new global markets. And it certainly doesn't stop at small businesses or individual consumers. Financing is what scales our most massive, heavy industries. Take maritime shipping, for example. The entire global supply chain relies on immense cargo vessels. Without these massive capital bridges, companies would struggle to manage their enormous operational costs, let alone acquire new, state-of-the-art vessels, or upgrade essential industry-wide safety systems. Without available capital, these multi-million-dollar world-changing projects would just stay as ideas, and human progress would essentially stall out. Which brings us to a perfect summary quote from our source material. Simply put, financing businesses help keep economies moving. It really is that fundamental. By providing access to capital, these institutions empower individuals, visionary entrepreneurs, and multinational corporations to achieve immense goals that would otherwise be mathematically impossible. They create the opportunities, they underwrite the innovation, and they actively drive our global growth. So I want to leave you with a thought to take with you out into the real world today. As you go about your day, the next time you see a brand new factory being built in your town, or you see footage of a colossal cargo ship crossing the ocean, ask yourself, what financial bridge helped make that possible? Because behind almost every great success story and marvel of modern engineering is a carefully structured financing solution. Thank you so much for joining me for this explainer. Keep your curiosity sharp, and I'll see you in the next one.